the stage our next panel, which is how Canadian FinTech can compete in a global market, with our moderator, Sam Gabor. To the stage. Sam is counsel in Gowling's WLG's Calgary office. He has a long-standing litigation and solicitor practice focused in restructuring, insolvency, and bankruptcy law. Sam has an extensive experience in intellectual property matters. Sam has written several publications regarding digital assets, the metaverse, non-fungible tokens, and decentralized autonomous organizations. He has consulted with the government of Alberta regarding amending his Alberta Personal Property Security Act to specifically incorporate a framework for digital assets. Sam has further presented on amending personal property security legislation to specifically incorporate new laws and regulators for digital assets. That's awesome. How's the rest of our panel? Ready to go? Come on out. Thank you.
Thanks everyone for coming out today, and hopefully we're going to have a great panel. I'm Sam Gabor. Thank you for the intro, Tyler. We're each going to sort of tell a fun fact about one another as I introduce the wonderful panelists. So my fun fact is I have a group of friends that call me Air Guy, which is somewhat ironic. As you can see, I used to go to the Blue Bomber games in Winnipeg, where I was from, and I'd wear a blue and gold wig and cheer pretty hard for the Bombers. So that's why they call me. That's why they call me Hair Guy. But anyway, to the left of me is Pamela Draper. Pamela is the president and CEO of BitVo, which is a cryptocurrency trading platform that is located in Calgary, and the president and CEO of Patino Payments, which is an online payments platform. Fun fact about Pamela, she's from Ontario. Don't hold that against her, but she's actually a pretty good skier as well, despite that. Same in Manitoba. I don't know how we learn how to ski. You have to move to Alberta. Next is Paul Twigg. He's the Chief Technology Officer at Digital Commerce Bank, which is a Schedule I Canadian bank that provides secure payment technologies. Paul believes that Manchester United is the best football team in the world.
That's absolutely true.
So we'll let anyone argue with Paul at the break. Next is Chelsea Halleck. She's the Business Development Manager of Enterprise Technology at Calgary Economic Development, which promotes the technology sector in the city. Chelsea has never eaten a banana before, and she bought Bitcoin at $80,000 Canadian. So she will be holding for the long term. And last but not least is Amna Zia. She's the Chief Executive Officer of Fuse, which is a technology platform that provides banking, payments, and financial tools. Amna has lived in 4 different countries, in 3 different continents, and has traveled over 30 different countries in the world. So if anyone has travel stories, I'm sure you have a couple hours of conversation and stories to share with Amna at the break. So that's the panel, and we'll start off with our first question. We're talking about how Canadian FinTech can compete in a global market. So the first question, which I'm going to ask the panel, is it's clear there's a major value case for FinTech adoption, but it can sometimes be challenging for government and industry to see the risk versus the reward. What do you think makes the most compelling argument for accelerating FinTech adoption? And Amna, do you want to start us off?
Sure. Thank you so much. So there are a lot of arguments for accelerating adoption for FinTech. And I'll share a personal story. 21 years ago when I moved to Canada from Pakistan, my family didn't get access to credit products, didn't get access to a lot of banking products. We couldn't even get a credit card to make payments. And I think this is where FinTech plays a big role, where it makes the sector more inclusive, right? More inclusive for people that are underbanked. And yes, in Canada, we are very inclusive, even in our financial sector, where there's not a lot of population that is underbanked, but there still is, there are pockets of these sectors. And with Canada looking at bringing 500,000 new immigrants to the country, there's definitely gaps in our financial sector. And that's where fintechs can come in and close that gap. The other argument that I would make, and I would shamelessly plug Fuse Financial for that, is if we need local buyers and local demand to create a cluster or economic hub in any economic, like in any geographic, look at Silicon Valley, look at any other sector, Napa Valley, where these clusters and big economic places exist, they exist because there was local demand, right? And local demand is created by government and financial institutions. So they need to accelerate their adoption to create a thriving fintech sector in Canada. And that's the argument, because small businesses, which is what Fuse Financial supports, is the backbone of the economic growth in Canada. And that's what needs, that's the best compelling argument I can make, because small businesses provide a lot of economic growth. About 90% of employment comes from small, medium-sized businesses in Canada. So those are a few arguments that I would like to make.
Yeah, financial inclusion in summary, I think, is what Anna is highlighting. But the other thing that I would highlight is, and it's relevant to the topic of this panel, is global competitiveness. So other jurisdictions around the world are adopting these technologies at a rapid pace. Some of them out of necessity. So if you look at countries like Africa, where financial inclusion is all that much more important than it is in a more developed country, they're developing rapidly to fill that gap and to make sure that the people in the country, in the continent, are included. But then also other continents or other areas like Asia and Europe are just much more prone to adopting this technology and have become a little bit ahead of Canada in that regard. So I think we have to continue to focus on this in order to keep up on a global scale.
Can I add a comment?
Yeah, of course.
Just to give you a bit of a banking perspective, right? I think fintechs have got a massive opportunity in Canada right now. You know, the banking industry, or the movement of money, has to be highly regulated. And I think we're fortunate to live in Canada, you know, where it is highly regulated, and we see the opposite of that down in the States right now. Not to poke fun at that or to jump on an opportunity, but in a situation where things are not highly regulated, stuff goes wrong real quick, right? And when we say real quick, a day, 2 days, right? It just happens. In Canada, we're highly regulated. But because of that high regulation, money moves behind the scenes a day, 2 days, 3 days, 4 days later. And as a bank, our biggest, you know, our two biggest, you could say, departments, or our two biggest things that we have to look at is, number one, risk, and then number two, reconciliation. It's actually nothing to do with money movement, right? The money movement is easy to do. Where the fintechs come in is really talking to the end customer, right? So if the bank is focused on regulation and making sure that when money moves, it moves correctly, right? Minimizing fraud, fintech is able to jump in there and really understand the customer. And we're seeing that, you know, I think Anna talked about Fuse, and there's a whole bunch of other examples here in Canada where fintechs are jumping up and they're fronting money, taking risks so that customers can see money movement a lot faster, to kind of bridge the gap between traditional banking, where removing regulation would be extremely bad, and really what our customers are looking for. You know, QR codes, great example of that, right? I was actually at the conference last week, and there's a guy from Brazil down there who's talking about how Brazil as a country have adopted QR codes. And yeah, literally, you go into McDonald's, you scan the dynamic QR code and you do a payment. Then every bank is bought onto this down there, and it's really enabled fintech. We see that in India, we see that in China as well, and you know, eventually we'll see that in Canada. I know in the US it's a big part of their upcoming policy as well. So you know, if you're a member of a fintech, or you know, there's a massive future for you here, but your goal is to bridge the gap between traditional banking and what your end customer needs when it comes to money movement.
And I would just take an economic development lens. So, I mean, the reason why we need to adopt fintech innovation is we've seen a lot of proof locally why. There's been a $1 billion acquisition investment in our city with Morgan Stanley acquiring Solium Capital and becoming ShareWorks by Morgan Stanley. So the movement of capital, we've seen Neo Financial in our city, who's a challenger bank, fintech startup, create over 600 jobs, and be one of the fastest growing tech companies in Canadian history to reach $1 billion valuation happening in FinTech. We've also seen local paytech Simon, who's raised over $200 million in VC capital. So I think the level of investment, the ability to solve global challenges like empathetic debt collection, which is what Simon does, and the financial security aspect and the job growth is all, it's really clear we're seeing it happen here. We don't have to look too far to understand the potential for supporting FinTech adoption.
That's great. So the next question is, studies show that relative to the US, Europe, and Asia, Canada is a relatively slow adopter of financial innovation. How much do you think this will impact our future economic growth and competitiveness? Chelsea, why don't you start, because I think you're the perfect person to lead us all.
Well, I am really fortunate to work, every day hearing from founders and startups what some of their key issues and challenges are. And consistently, I do hear that Canadian customers and Calgary customers can often be some of the most challenging ones to acquire, that we're more cautious and slower to adopt, and that's certainly feedback that we share throughout our network and with policymakers who can advocate for change and incentives to help us overcome that. But then on the other hand, I also hear from local, national, global investors that because of Canada's high degree of security and regulation and the trust in the banking system and the government, that we're also a really ideal location for fintechs to adopt. And we've seen a couple of examples of that recently. I think Canada was one of the first markets to launch the ETF for crypto industry, that we also as a province are we're the only province who launched a FinTech sandbox to allow FinTech companies to operate outside of current regulation and really push innovation. And we're seeing a lot of proof, not just in our local companies, like I mentioned, but also in global interest in our environment. So last year alone, we had multinationals like Xero expand to our market out of New Zealand. We had FinTech SideTrade come to us from France and establish their North American headquarters here. And we also saw Global Shares come out of Ireland and expand their North American headquarters in Calgary. So there's a lot of interest from global players to be doing business in Calgary and in Canada. But certainly it's a known issue that Canadian customers can be slow to adopt.
And if I can add to that, that's because Canadian consumers have a lot of trust in the big five banks, right? Or the banks that have established brands, where in some of the other markets, such as US, that doesn't exist, and people, just generally in the population, the attitude towards risk is not as averse as Canadian are. So at one place where this regulatory environment provides stability and has brought stability into our banking, it has also made us very slow to adoption. And that's a huge issue for Canadian tech companies, like even startups, because this is my second startup, and I can tell you selling to a bank is like a nightmare. It's a nightmare that keeps me up every night because it could take 2 years and still they would be stuck in the proof of concept stage with you, right? So I think there's definitely a policy change needed and some form of incentivization from the government where Canadian institutions are compelled to adopt technology, and not just adopt technology, but adopt that technology from Canadian startups or Canadian technology companies. Because they are doing that. Like I have seen emails go out to 500 vendors from certain big banks, and all of them are US vendors in there. And whereas like my counterparts in US are able to get better adoption from people, like consumers directly, as well as from banks, it takes them 2 months to sell. Like, it's a selling cycle is so short. That's because the banks and the population over there is known to take risk and is incentivized to do so. So I believe that there needs to be, like, there is that risk and reward that we are sort of treading at, and I think the longer we look at the stability from a regulatory perspective that it brings, the sooner we're going to be obsolete, right? Like, our system is going to be obsolete to meet the needs of the consumers in a very efficient manner.
I don't know if we should have a conversation about those IT departments delivering software for startups there. The joke is my IT department actually delivers Amazon software. It just
But we're
everybody on the
not
inside track.
we're not a big five bank.
But we're not a big five bank.
Yes.
So we deliver quickly. But you know, I think this becomes really important consideration for us, right? You know, and again, I'll jump back to that regulation thing. We don't want to get rid of regulation. We just need to come up with new ideas. And as a bank, we're actually releasing new functionality every month. All right, as we get more and more creative. And I'll give you an example, and you may have seen some of this as you've interacted with third-party companies there over the last year. You know, everybody knows about e-transfers, right? And you know, it's something that everybody does, and if they don't, your kids do. That's an absolute guarantee. And over the last 6 months, you've seen a change where you've been sending money to where companies that you meant to send money to or people that you meant to send money to are now requesting you send money, right? And the actual conversion rate is nearly 50% higher on the send money versus the request money, i.e. you're more likely to send that money, so now companies are requesting it from you. And this is innovation. When I was in the US last week, they have a massive program, Request to Pay. It's coming online actually in just a couple of weeks, and everybody's talking about it. I'm like, we've had that for the last few years, right? And everybody's starting to use it there. And so the innovation is there, but it's safe innovation. And I think that's really where the opportunity for FinTech comes from, is to basically take the standard ways of moving money and innovate on top of it.
Pam, do you have anything you want to add?
I think the next question, which talks more about regulation, will dovetail really nicely with it.
And I totally agree with what everyone says. You need a fine balance between commercial certainty that's going to give investors confidence and help businesses grow, but at the same time not stifle innovation. It's really a fine balance between the two of them. So the next question, which I'll start with Pam, is a common challenge faced by Canadian DeFi businesses is a lack of access to traditional banking and other important business services like insurance. What do you think needs to happen to bridge this critical gap between the digital economy and TradeFi?
So depending on the circle that you're in, this will be a popular or unpopular answer, but I really think that it is regulation that would assist with that. Our group of companies, the Digital Commerce Group, we've always, first of all, we come from the traditional financial markets in terms of founders and shareholders, so we're used to operating in heavily regulated environments. And as a result of that, and also knowing it was necessary for the industry to succeed, we set up all of our businesses to be regulatory compliant and forward first. So our payments business registered with FinTrack as a payment service provider before we were required to. Our crypto asset trading platform, BitBo, registered with FinTrack again before the industry was required to, but we were also one of the first platforms to seek registration as a restricted dealer with the securities commissions well in advance of when they enforced upon the rest of the industry. We've recently just submitted our application to become a full IROC dealer. So I think that's really important to gain the trust of banks and insurance companies to the question. But also, I think there has to be constructive and informed regulation. So it can't just be regulation for regulation's sake. It needs to fit with the industry and still not hinder innovation from that perspective. And I think that in Canada, we've kind of struck that balance relatively well, but we've also given a framework versus the rest of the world where you know the guidelines, which to the question, what brings banks and insurance companies in, that's really what brings them in, is they know the guidelines from which they are allowed to operate, and they're not worried about banking a company that is suddenly going to become offside regulation if it changes. The US is a really good example of that right now. Blockchain companies and digital asset companies in the US including the largest publicly traded exchange, Coinbase, are really fearful in the US right now because they've taken a regulation by enforcement approach as opposed to defining regulation in advance and saying, here's your rules of the game, play by them. They said, you know, we're thinking about it and we have committees set up to think about it, but while we do that, we may selectively through the SEC enforce upon you if we think you've violated rules which are not really well defined right now. So we've avoided that in Canada, which is a good thing. All that said, our companies, select of our companies that are fully regulated and following the rules still have a problem obtaining banking relationships with the big 5 banks, and not every bank, but certainly the big 5, and insurance companies as well. So I think in that case they don't have an excuse, and when they're still not willing to play in those developing financial technology markets, at that point I think the government perhaps needs to step in and encourage their participation in order to truly foster economic inclusion for those companies and a robust competitive market that we can deliver to our consumers as a result of allowing those companies to grow and to thrive.
I'm going to turn over to Paul on the banking side now.
Yeah, it's a tough one, right? So you look at fraud, and you know they were saying like 2% of global GDP last year was fraud, right? And who eats that money, right? You know, where you know it's just money that's all of a sudden just not there anymore. And, you know, as a bank, we have a compliance team, and I think their excitement is when they're able to call the police because they found something there, and that's as extreme as it can actually get, right? The police being involved. We see AI involved in fraud on a daily basis, and have to compete with AI to be able to look at that, right? And so, you know, do we lower the thresholds and just deal with everybody, or do we deal with fraud? I think you know one of the next questions I'll try and address that a little bit. But you know, regulations are important there, but until we've addressed fraud, we'll never get rid of the regulation because that's how we de-risk things. And right now, I would say here in Canada, you know, I was actually on stage with a client last week, and the conversation was, you know, they deal with fraud, we deal with fraud, we actually deal with the same fraud company to some extent, but they do the exact same thing we do, but we don't share information, right? And we're not sharing information with Interac, we're not sharing information with Payments Canada, not because we don't want to, because that's just not what the industry sees, right? So, you know, there's a way of escalating and reporting a problem there, but saying, hey, how do we combat fraud? That's not a conversation that, you know, the CTOs of the big banks are sat down having today, right? Which is, I think, one of the major reasons why we're seeing companies not being backed or not being insured, because we don't have a common fraud combat.
So what do you think is potentially going to get some positive results then for companies on the fraud side to address that and kind of alleviate banks' concerns?
So I'm speaking at the Payments Canada conference next week where I'm going to answer that question. But I give you guys a little bit of an insight, and for me it's identity, right? And you know, I think this is the right audience to actually have this conversation. So if you think about this, if you take a PayFac or you know just any payment company, think iGaming, right? And it's one of the easiest use cases, you know, online casino or something like that, right? And you create an account, you upload your identity, they do a bunch of risk analysis on your identity and say, hey, this is your threshold for being able to use the gaming services, i.e. do payments, right? They're not a bank, so they can't process the payment, so they come to us and say, hey, here's a payment from one of our customers, right? And in fact, the way we do it is all through APIs, so they call our APIs, because we have a contract with the PayFac and understand that PayFac and say, hey, in that contract, it's all, make sure you understand your customer, right? We're actually just assuming that they've done it, right? And the assumption's a good assumption because there's controls in place to look at it, but we don't understand the identity, right? We get a little piece of that, and then we pass it on to Interac, and we pass on even less information, and then Interac pass it on to another bank who get even less information. By the time it gets to the end, the identity of that individual is completely lost. So the risk starts off really small, but ends up really big. And this is the payments industry in Canada. If we could take that identity without providing the information of the identity, but provide trust, right? And I think you've all got the answer to this question now, right? Is, let's look at blockchain and trust, and an identity framework built on blockchain, and there's a few out there, right? And we could all kind of buy into that concept. I could read into that blockchain and say, hey, do we really trust this individual? I don't need to care about where that's come from. I just know there's a principle in place to say this individual is actually now trusted. Okay, so I call into the blockchain, that comes back, and now my risk is reduced, right? And if every part of the journey of that payment actually took that same journey, or that made that same query, we would have the same understanding of the individual that was moving money and the same understanding of the individual that was receiving money. Take a simple example, right? If I send you a request money, request for $100, right, and it is iGaming, right, and I'm using hypothetical numbers just here, and you forward it to a friend, and then that friend sends in $1,000. That $1,000 could be above your gaming threshold, and if the company that sent that initial request money out accepts the $1,000, now they've disobeyed regulation and they could be fined, right? And this is a use case that happens every single day, right? That we're having to look at, and that now could be labeled as fraud, right? Or potential fraud. It could be labeled as somebody trying to bypass regulation, which is legal, right? And then everybody's on the hook, right? And it's literally because we don't share identity. So one of the things I'm going to share at the Payments Canada conference, who won this conversation there, is let's look at a common identity in Canada where all banks can participate in that same problem.
Yeah, I completely agree with that. I think that's one of the ways industry can collaborate, or there could be a collaboration between TradFi and DeFi, is to sort of level the field on the digital identity and then collaborate to facilitate the flow of funds. Another way that actually brings me back to your comment about the innovation hub, the FinTech sandbox. That's also important as well, because if traditional banks or traditional providers provide a sandbox where all these DeFi companies can test their technology and show how it is safe and how it does abide by regulatory environment that has been put into place, or where does that regulatory environment is not actually, like it's a regulation for the sake of regulation, as Pam mentioned, that can also bridge the gap between the both sectors and get them to collaborate better. So I think FinTech Sandbox was a great launch by the government of Alberta, and identifying FinTech as a very strategic sector for them to focus on for this budget and for the next fiscal budget. That's great to hear.
And to add to that, so my comment on this topic would just be to continue sharing key challenges with groups like the government of Alberta, because within the FinTech Sandbox department, they also run a financial services concierge. And it's the same department that is responsible for future policy making, although many of this is federally related. I think just information sharing with those groups like the Financial Services Concierge, with your economic development agencies, with your associations, tech associations like Canadian Blockchain Consortium and Digital Alberta, the more people understand the key challenges, the more that they can help solve and find solutions and put your solutions forward. So I think there's a lot, we talk a lot about collaboration, especially in Alberta, and that's true. So just ensuring that everybody is aware of the industry challenges and can help you move forward with them.
So Paul, you talked about blockchain. So the next question is, do you think that Canada should follow Singapore, the UAE, and UK with a national blockchain strategy? And if so, why would this be an important step? So I'm going to turn this over to Pam to start us off.
Yeah, sure. So I think let's not forget that we actually do have reasonable regulation in place for the blockchain industry as it pertains to DeFi and to cryptocurrency. Canada's actually ahead in that regard in comparison to a lot of global jurisdictions. So I think that's important to remember. One of the differences about Canada in this regard is we fit that regulation into our existing regulatory ecosystem as opposed to developing custom regulation for a new and developing sector. And there's pros and cons to doing that. So a pro would be that it's easy to do more quickly, which is how we got to the place where we're actually ahead of a lot of other jurisdictions. We fit it into our existing securities laws. A con is that it may not properly address certain nuances of the new and emerging technology, and I think within our system there are some examples of that. I think we can continue to work with the regulators on that, but I think overall that's helped the ecosystem in Canada. As Chelsea mentioned earlier, we're one of the first to get a crypto-based ETF approved. We're one of the first jurisdictions to have exchanges within a regulatory environment, which helps build confidence, but it also helps to ensure that consumers are properly protected in that regard. So I do think a specific strategy and regulation around that strategy is helpful to the question, and I think that we've benefited from that. But I think that having a strategy that specifically is developed for that, a strategy as well as regulation would help Canada become more of a leader in the space. It already is in certain regards, but I think there's room for improvement there. And I think it would not only help the home ecosystem, but help draw some of the world's best talent to this country to help continue to develop it, given that there's clear defined rules and support from the government within the strategy, whether that's grants or the like, to help companies grow.
Chelsea, do you want to comment next?
Yeah, well, I think it's always helpful to have a North Star for any high growth sector that's ripe with economic opportunities and can help us diversify our economy. We've seen Canada support AI in this way and quantum in this way. So 6 years ago, Canada launched a pan-Canadian AI strategy. Alberta was one of 3 regions that were identified as an area of focus under the AI strategy. And in 6 short years, the nation has seen over 600 AI companies develop. We are now a top 3 center of excellence for AI research globally, and that's under the work of Alberta Machine Intelligence Institute and the University of Alberta. And then quantum strategy, which is relatively new, it was just launched last year, but the National Quantum Strategy has $360 million contributed to it, 23 million of which went from the province of Alberta to the University of Calgary to build out Quantum City. And so you can tremendously increase your research capacity, your homegrown talent, or your talent retention and acquisition as soon as you have a national strategy to back up a high growth tech sector. So having that in place for the blockchain industry would create tremendous potential there.
The other thing I would say too for Canada specifically is that historically we've had a very natural resource-based economy, whether that's oil and gas or it's mining. So I think, which is great, there's nothing wrong with that, but I think diversification is good and can only augment the economy. So having specific strategies in place around new and emergent industries that we want to participate in and to lead globally will help us overall.
Paul, do you have any comments you want to add?
Yeah, the thing I'd add here is, if we look at the definition of a national program, right? So again, take identity. This is one of my big pet peeves right now. Is if there was a definition of identity by the Canadian government, in other words, it wasn't somebody like our company saying, "Hey, let's create a definition, and everybody in Canada can use it." And let's face it, not everybody in Canada is going to trust DC Bank. Right? Very few people are to have that. It's just like we might not trust Facebook or other big identity programs, right? But if the government comes up with an identity program, maybe the trust is a little bit higher. But if it's a definition, then it enables innovation, right? Because it allows us to code into it. And, this is what Brazil did so well with this QR code thing. Is the government actually created the definition of the QR code. Each bank could inject their little pieces into that QR code, and then as somebody goes into McDonald's or into a retail store to scan, it opens up a banking app and everything just plays. Well, but it took a national body to create a definition so that everybody could play in that same game. They didn't create the implementation, they didn't stifle innovation, but they created the definition. And I think that's the key. If we have a national definition, everybody can play.
Just to reduce your irritation about the national identity, so Government of Canada did put out a national mandate to get into digital identity, just so they can run census online, like so you can vote online, things like that. And then they went to and picked a vendor from US to provide them with that service. So here we are.
That's also not blockchain backed.
Yeah, it is not blockchain backed, and yes, reading the RFP, we knew specifically which vendor got picked, but it was part of the national cybersecurity policy that Government of Canada has put out, just because, as you mentioned, fraud is eating away taking away a lot of the productive dollars from the GDP. So they did come out with a national cybersecurity policy, and creating a digital identity was the top of priority within that strategy. And I don't know where that is, but I can track it down for you this evening.
So fraud is the whole reason why we have a compliance team at the bank. It's the whole reason why we say we're not going to bank certain individuals or certain corporations, because we don't trust them.
Yeah.
Right? If we could trust them, then we'd bank them.
Yeah.
Right? And it's really as simple as that.
And then you can vote online, like, you know, we do everything online. Why do we have to stand in line for 4 hours to go vote? Yeah.
I agree.
Okay.
I don't argue with Anna. It's a bad policy.
Yeah, no, I totally agree. I think, you have to have smart laws, regulations that are clear and concise and create certainty for companies. In my space, I'm a big proponent that we have to update the personal property security legislation in Canada, because right now there is no framework for taking proper security in digital assets that are tied to the blockchain. The United States, they're creating a framework under the Uniform Commercial Code, but in Canada it's sort of a patchwork trying to use the existing regulation to figure out what type of digital asset falls into which bucket and how to take security in it. So I agree, you need to have smart regulation that people can understand and create certainty. So the last question I have is, from your unique vantage points as Canadian FinTech leaders, where do you see the biggest opportunities for financial modernization in Canada, and what kind of economic impact could this have? Paul, why don't you start us off?
Can we poll the audience? Just quick show of hands there. If there was a national digital identity, that would stop you having to provide your driver's license in every place that you typically have to provide. Think how many times you've provided your driver's license or a copy of it in the last few years to different organizations. How many of you would actually sign up to that national identity? Hey, check that out. This is like should become regulation now. Can we pass this in Calgary?
Democracy in action.
This is democracy, absolutely.
I think I have more power.
We were hoping. But I mean, how do we make the difference, right? If I was to, give some advice to a fintech or something like that, and I'll give you an example. I was talking to a friend in Scotland. This was actually a couple of months ago, and they were coming up with an idea for a fintech, and actually just put a business plan out. And out there, buying carbon credits is a massive thing for just the environment and people. And here we pay our RRSPs. Well, how about instead of the company funding an RRSP venture, the company actually goes and funds buying carbon offsets, right? And that carbon offset could be a tree. And, maybe you have some contract with a tree planting company. You buy a tree. At the end of the day, it becomes a tradable asset, right? So the money's not lost. It's just a different kind of trade. I never thought I could have a tree as an RRSP with my name on it. But you know, there's a million ideas like this of how money can move there, and it just requires a little bit of fronting cash to make that happen. You know, I have conversations with our clients on a weekly basis where we're looking at innovative new ways of being able to help customers spend money, right, or move payments, right, which is, you know, ultimately what we want to do. So, you know, keep innovating. It's there, right? Don't focus on the regulation, right? Focus on the end consumer and what they need in their portfolio.
Which makes sense. Generally, the laws are created for the needs of the society, and not the opposite. That's how corporations first came into existence, is that you needed a separate legal entity because there was too much personal liability on someone, so they created corporations 150 years ago.
But sometimes we let that restrict us, don't we? Right? We say, hey, this is the law or the restriction, right? Where as a bank, that's our law and restriction, but as a fintech, it's not, right? And I think not to get around the law or restriction, but to be able to enhance it.
Amna?
So I wrote down my notes for this question, and then I went to ChatGPT to see to see if it agrees with my intelligence, right? So the first thing it spit out is open banking, and I think open banking has been talked about so much, right? And we have been slow at adopting open banking. Every time we see hope, we get pulled away. And open banking is just a simple concept that a consumer or a business should be able to say who and what information they want to share with someone. And so what I had put down for that was better adoption. Like if open banking is not coming, then incentivize the big banks that are servicing consumers to adopt technology better or faster, right? Become better at that. Because the end goal is of both open banking or better adoption by banks of fintech technology is better consumer services. So our world has changed, the way we live our lives and organize as a society has changed. And the current systems and current products and services that are in place don't necessarily meet our needs. There's a lot of friction. So that's what open banking is supposed to do, is to provide fintechs with the data based on consumer approval of what type of data they want to provide, so that fintechs can provide them with better service than what they're getting from the big 5 banks. Or the other way they can do that is get the big 5 banks to adopt better technology at a faster rate, so they can provide the same services and reduce the friction. So I think I'll stop at that because, you know, ChatGPT did provide digital identity verification as the second choice in this question. So.
I didn't use it though.
I know, right? But I'm saying that we're intelligent than the AI.
We use it to help create our policies. Oh, no.
Paul's been so vocal about it at so many conferences, maybe ChatGPT is picking up what Paul's saying and putting that forward.
There's actually a really good webinar, and I say that my brother's actually presenting the webinar in 2 days on how ChatGPT can change policies in the financial industry. So if anybody wants the link, let me know. I can fire that off to you.
And I can provide all the prompts that you need to do in ChatGPT to get your optimal policy.
Economic impact for financial modernization. We've touched on this a bit already. I mean, it's the growth in jobs, the growth in investment dollars in our region. So Alberta is undergoing a $20 billion digital transformation over the next 2 years, led by Calgary, and that's happening across all of our key sectors. And I think that, you know, the solutions that entrepreneurs and founders are coming forward with across pay tech, reg tech, insure tech, wealth tech, all the techs, blockchain can really impact and take a chunk out of that $20 billion digital transformation and have a massive impact on all of our key sectors, from transportation and logistics to energy, renewables. So there's just so much potential. We are seeing, you know, prop tech companies who, and we kind of all sum these all up to fintechs, but, you know, prop tech companies who are taking property managers off of such archaic practices where they're managing thousands of clients and condos within their emails still, or investors who have funds that are hundreds of millions of dollars that they're still like saving and tracking in an Excel spreadsheet on their desktop. And so we have, pay techs and wealth techs who are solving these challenges. I think there's unlimited potential for these, and I don't have the answers, but these entrepreneurs do, and they're coming with all of these global solutions to all of these challenges, and the economic benefits are tremendous.
Yeah, I think within Canada, when you talk about the biggest opportunities in fintech, it's almost everything given where we are relative to some of our more advanced peers globally. So whether that's open banking, whether it's asset tokenization, whether it's decentralized finance or DeFi, any of those could be a great opportunity. So I think it's not one specific opportunity, but the way Canada maybe approaches fintech. And what I think we need to do is foster more innovation through promoting and helping those entrepreneurs who are willing to take those risks and start those businesses, to look at what the other countries in the world are doing and bring some of those ideas back home. And then government support to have those businesses grow, but also support from the existing financial infrastructure, particularly the big five banks, to allow these technologies to grow. And they're going to be disruptive to the existing businesses, but the reality is the existing businesses could sit back and do nothing and hope that the world never changes, but it's going to change because eventually consumers will demand that change. So better for the entire ecosystem to allow that to grow here and to flourish here as opposed to try to fight against it.
Totally agree. So we're going to open up the room to some questions. I think there are... Yeah.
Got some hands? Yeah, we've got our microphones. Who's got a question?
I have a question as well.
Oh,
I also hand out the mics.
Fantastic.
I've tried to find a way to simplify this. Why do you think the Canadian government restricts my ability to buy crypto? Because I may lose money, but is more than happy to authorize online gambling where I am guaranteed to lose money over the long haul.
Why don't you answer this one?
I think that's a good question. I think that it's not necessarily the government, but I get where you're coming from. It's the regulatory bodies which ultimately roll up to the government. And I think that with any emerging technology, we saw in Canada some big failures early, like with Quadriga and with Einstein, where consumers lost a lot of money. So I think that there was a need to put a structure in place. And they've done this, and I spoke to this when I spoke about regulation and the need for appropriate regulation. They've fit it into the existing framework, which has its pros and its cons, and one of the cons is that it might not accurately or appropriately address some of the nuances, and restricting consumers from doing what they want might be one of those. Should you protect people from themselves? Maybe, maybe not. I think in online gambling, there's certain restrictions that are in place that limit the amount as well, and similar for crypto, and certain cryptos you can buy as much as you want, and certain cryptos you can't, and making those distinctions, I think, is challenging for a government when they're trying to put in place regulation really quickly. So I think what we need to do is work with the regulators to try to amend and adopt the existing regulation into something that works a little better over the long term.
Anyone else going to take a stab at that answer, or that was great? Hush falls over the panel. Any other questions we've got before we release you all to the wild of lunch? Oh, right here down in the front. Throw the cube. Let's use them as they were intended. Nicely done. Oh, there we go.
The big banks aren't represented here. And if they were, Paul, or anybody there, what would they be saying about this crowd of people that want to get into their dojo and muck up their gravy train?
So I have had conversations. So I'm launching a challenger bank for small, medium-sized businesses just because that market has been so badly served by the big five banks, credit unions. And there's a lot of challenges in terms of getting small businesses access to payment options. There's a lot of disconnected tools. And I experienced all of these problems personally myself, running scaling a startup from 5 employees to 20 employees. And spending multiple days and hours on financial reporting. So they would say, what are you talking about? We do all of this.
And I think on top of that, they'd point you to the US and say, hey, what's happening here is actually working there, right? Because it's controlled. And yeah, it's restricting, but it's controlled, right? And yeah, it's the unfortunate answer versus innovation and trying to move forward.
Yeah. They wouldn't say like, oh, like 10 days to open a bank account where all the co-founders from different cities have to fly to one branch to sign documents. What are you talking about? This is innovation.
Yeah, just come and use our APIs. You got to know what your competitors are doing, right? And I guess one day as a bank, when we grow up, we want to look like one of the big five, but we still want to innovate. Then I logged into their sandbox, their developer center, and they had all of this material for these 4 amazing APIs that I couldn't even do a payment with. It's like, check out ours, right? I mean, there's 350 endpoints. We'll let you move money any way you possibly can after we understand who you are, right? So that it can be regulated and governed appropriately.
I'm curious, I'm going to tag on. Is there a watershed moment coming when this is forced, or is it just the slow meandering of time and customer demand and we'll change when we need to, or is there a breaking point?
For technology adoption for big five
For the big
banks.
banks.
Yeah, I think that point is coming for them. They see that their market share for maybe consumer financing, for the consumer market has decreased. Like, look at Wealthsimple, right? Like, it has ballooned to having, I believe, $4 billion of assets under management. So now the big banks are looking at it and saying, okay, well, what are we doing wrong? And because of that, Wealthsimple is able to have that influence, right? They were able to be the first one to not be a bank and be parts of Payments Canada to clear their payments quickly. So I think that point is coming for them. But like, as the saying goes in the FinTech like founder groups, like, we're never afraid of sharing our ideas with the big five banks, because they will never build something in-house. Like, they will never be able to build it. So we are never afraid of sharing our ideas with the big five banks. We show them openly what we're building. And then 5 years later, they come up with a version of it that is so shitty.
Not allowed to use that word on stage.
Okay, sorry.
I think it's encouraged, actually, in this round.
Well, one of the things I'd add to this, though, if you guys are, FinTech looking into this industry, take a look at the RTR, real-time rails that are coming with Payments Canada. It's coming in about April 24. It's going to be an absolute game changer in Canada for us. So, as I mentioned earlier, all the reconciliation happens next day or next couple of days, or there's a public holiday 3 days later, that kind of thing. And with RTR, you're looking at 10-second reconciliation, all right? And so when you reduce the risk of money, right? So that means us as a bank now, our risk has been reduced from potentially 3 days to 10 seconds. Now, all of a sudden, we can offer a lot more services because that risk has been reduced, right? So our teams are currently innovating around this RTR. Not all of our clients are actively looking at what is RTR going to bring to the game, right? And yeah, it's run by our government monopoly with Payments Canada and Interact and MasterCard and stuff like that. However, the opportunity is going to be absolutely massive. Now, if you may be considering, looking at how our Canadian banking system works with Europe, RTR's bringing us up to about the same level. But if you're looking at how it is with the US, I mean, we're light years ahead once RTR is in place, because everything's about reducing that risk. So that would be a good focus point for anybody in the audience that's a FinTech.
Yeah, and it also is playing on that point, right? So in a digital world is a zero trust environment, right? That's where the big issue is for traditional finance, and that's where the big divide is between traditional and DeFi, is digital world and digital finance is all happening in zero trust environment. So the longer a transaction is sitting without being reconciled in a zero trust environment where there's no digital ID verification or a common digital ID, the risk of fraud is so high. So if we want to eliminate fraud, which is eating away a lot of our GDP, and putting it into wrong hands and taking it out of the economy, RTR is a great example of innovation that that basically accomplishes that. It reduces your time to reconcile a payment, basically, and the intermediaries are taking very little risk, and that should reduce the cost of payment.
As a bank, we actually just took that next step, right? So you guys have been transferring email with you transfer an email with transferring money with your phone number. I actually can't imagine anything worse than transferring money with SMS. But anyway, we do it, and actually, it's just this week we're releasing account number routing, right, where you can actually move money based on an account number. So all of a sudden, there's a bit of an identity starting to be created, and it's this identity that's going to be pushing into this RTR capability that's going to be released by Payments Canada.
Time for one last question, or time for lunch? All right. Oh, I think we got one right up here. Yeah, perfect. Thank you. Nice, excellent throw.
Hi guys, fantastic panel. A lot of us are, adopters of Bitcoin and other cryptocurrencies. Curious to hear what you guys think will be the product or the impetus to launch crypto from this kind of imaginary place on our computers to real day transactions.
Well, I think it's already starting. It's not so prevalent here, but again, if you look at it in Canada, if you look at the rest of the world, payment by crypto, as an example, as a use case, is far more prevalent. So you have countries like El Salvador where the government has put forward a method and a wallet to promote every single citizen of that country or person in that country to use it. And then you have other places like within Latin America or other higher inflationary environments, higher than here if you can imagine, where people are using it because it's not deflating or it's not as volatile as their own currency. So how do we get that here in Canada? I think similar to the rest of the financial technologies, we're kind of following the adoption and really it's getting the point of sale payments out there, but also the adoption in general. Still only something like 15% of Canadians actually have ever purchased cryptocurrency. That's pretty low when you're trying to use it as a payments method. But I think in general, cryptocurrency isn't a replacement for the traditional financial ecosystem, but an augmentation to it, or it's a component of it. So I think over time it gets integrated as a payment method alongside real-time rails, alongside other types of forms of payments.
Yeah, I think stablecoins are really the future. If you look at Nigeria, for example, their demographic growth is estimated to be 200 million to 300 million more people over the next 30 years. I think it's 30 to 40 years. They have 200 million people right now. Right now in Nigeria, the government is restricting the population from withdrawing more than $200 from an ATM a week because they're trying to push their central bank digital currency, and people are flocking to stable coins right now because they don't have any faith in the government, and having the government be able to essentially control their money. I've talked to people from Nigeria, and that seems to be the consensus that stable coins are really the push. And then you look at other countries that have growing demographics and are getting hammered by inflation. Like you look at Argentina right now, they're getting hammered by inflation. Inflation is just rampant, and it's going to be a significant problem for a long time. It's not going away. So I do think stablecoins are probably the one crypto that's really going to become more prevalent. I mean, Bitcoin is obviously not going away either, but I think stablecoins, there's a really good argument because it's actually backed to a hard asset, whether it's the American dollar, treasury bills, gold, or whatnot. There's an easier way to determine the value of it. So yeah, that's sort of my view.
So September this year, we can talk about this, can't we? I've already started, so we probably should. You'll actually be able to go to maybe a farmer's market or have an electrician, a plumber, a service person come around to your house and actually pay for those services in crypto here in Calgary. As we actually launch, we're actually launching that capability on smartphones, on POS devices, and through e-commerce. where you'll be able to pay Visa, MasterCard, Interac, and crypto, right? Why? Because it's a trading currency, right? And so, yeah, stay tuned.
I actually like that you said that, because now we can say for your development team, September is the date. You heard it here.
It's recorded.
Erase the recording.
Paul, just letting you know we like it up there too.
Huge round of applause. That was amazing, Madam. Thank you very much. Before I set you all loose for lunch, we're doing a lunch break from 12 to 1:30, so back here 1:30 sharp today. So I know that's a challenge. You got a bit of a long lunch. You might go get into trouble somewhere. Please make it back for 1:30. And I want to let you know, we had some news. Clayla and me had talked to the caterer and the group for tonight putting on the black tie dinner at the Brownstone. We've got one more table available. So there's 8 seats, 8 tickets available. If you're interested, you can find it on Eventbrite. Go through the Canadian Blockchain Consortium website. So if you're interested in joining tonight, because you're having a little FOMO this morning when we told you guys, you can get some tickets. So thank you, everybody. Enjoy